If you're in the UK, you probably think you're paying far too much tax. And here's the brutal truth. Most people are paying more tax than they have to because of a lack of education. But you won't be one of those people, because in the next few minutes, I'm going to break down step by step how you can legally pay as little tax as possible as a UK investor. This is mainly aimed at investors in their 40s, but really anyone can use the info to pay less tax. Chapter 1, why tax efficiency matters massively in your 40s. Here's the thing about your 40s. This is the decade where you're probably earning the most you've ever earned, paying the most tax you've ever paid, and seeing your investments finally grow to meaningful amounts. But guess who else is excited about that? The HMRC. Because when you're earning more and your investments are growing faster, every mistake is more expensive. For example, the government has made it worse, like the fact your capital gains tax allowance was $12,300 just a couple of years ago. Now it's only $3,000. That's a 75% reduction in your tax-free gains. And if you're in your 40s, that change hits you the hardest. Let me show you why. Imagine you've been investing for 10 to 15 years. Now your portfolio is bigger, and bigger portfolios equals bigger gains. But HMRC says, you know those gains you worked really hard for? Yes, we're taking 18 to 24% of them. So tax efficiency isn't optional anymore. You need every advantage available. And luckily, you have them. Chapter 2, the Stocks and Shares ISA, your tax-free growth machine. To kick things off, let's talk about ISAs. Because if you're not using your Stocks and Shares ISA properly in your 40s, you are losing money every single year, big time. Here's the thing. You get £20,000 per tax year. That 20k allowance is one of the most generous tax shelters in the world. Inside your ISA, no capital gains tax, no dividends tax, no income tax, no tax when you withdraw, no age restrictions, no reporting to HMRC ever. If you make $500,000 from your ISA, HMRC gets zero. That sounds good to me. And the crazy part, most people never fill their ISA allowance, especially in their 40s, which is exactly when it matters most. Let me show you why. The ISA compounding effect. If you invest $1,666 per month or 20k a year from age 40 to 50 at a 10% return, by age 50 you could have 341k completely tax-free. If you're behind on investing or you're finally earning good money, prioritize maxing your ISA before anything else, except employer pension match, which we'll get to in a minute, which we'll get to next. As you can probably guess, I'm not a financial advisor, and this isn't me giving out financial advice. I'm not an expert, not even close. Today's video is just me trying to help you with my experience. Chapter 3, workplace pensions, the tax savings most people miss. I'm going to say something that might surprise you. Your workplace pension is probably the most powerful tax saving tool you have if it applies. Why? Employer contributions equals free money. If your employer matches 5% and you contribute 5%, you've just got a 100% return instantly. No investment on earth guarantees that. A bonus is that pension contribution will reduce your income tax when you contribute through salary sacrifice. You pay less income tax. You pay less national insurance. Your employer pays less national insurance. And some employers pass those national insurance savings back to you. This is seriously tax efficient. If your employer offers more match at higher contributions, take it. And if any of this info resonates, hit subscribe so we can build wealth together. Chapter 4, the SIPP, huge tax relief. SIPPs are for people who want the biggest tax relief, the biggest compounding, the biggest long-term advantages. Here's what you need to know. 1, the government literally gives you free money. For every £80 you contribute, the HMRC adds £20. That's 25% tax relief instantly. If you're a higher rate taxpayer, you can reclaim even more. Example, you put £800 into your SIPP, HMRC adds £200. You claim another £200 via self-assessment. So your £800 contribution only costs you £600. That's a 33% return immediately, before your money even hits the stock market. 2, SIPPs grow tax-free. Like an ISA, no capital gains tax, no dividends tax, your investments balloon without the tax drag. 3, at retirement, 25% is tax-free. You can take a quarter out with zero tax. That could be 50k, 100k, 200k, completely tax-free. 4, SIPPs give you control. You can pick index funds, ETFs, shares, Diversified portfolios, unlike some workplace pensions that have limited options. Fill your ISA, get employer match, then maximise your SIPP contributions, especially if you're a higher rate taxpayer. This is how you build wealth fast while paying almost no tax. Just to be transparent, I prefer ISAs over SIPPs. Yes, there's more tax benefits with SIPPs, but you can access your ISAs anytime. And that flexibility is why it's my preferred choice out of the two. Chapter 5, Married Couple Tax Efficiency. Double everything. Now let's talk about something really powerful. Married couples can legally double their tax efficiency. Here's how. 1. Double the ISA allowance. You get 20k, your spouse gets 20k. Together that's 40,000 per year, tax-free. Most couples never take advantage of this benefit. Imagine 10 years of £400,000 tax-free invested, compounded to 682k tax-free by the time you're 50 if you start at 40, like the earlier example. 2. Double the capital gains allowance. The capital gains tax allowance is now £3,000 per person. Together that's £6,000. If one person owns all the investments and the other uses none of their allowance, it's wasted. 3. Transfer assets tax-free. This is huge. Transfers between spouses are free of capital gains tax, meaning you can move investments from the higher taxpayer to the lower taxpayer. Split income, split gains, reduce the tax rate on dividends. Reduce the tax rate when selling shares. This is perfectly legal and encouraged by the HMRC. 4. Marriage allowance. If one spouse earns under the personal allowance, they can transfer $1,260 of their allowance, saving the couple up to £250 a year. I could go on, but I'm not a tax expert. This video is really just to get you thinking about tax-free investing. Chapter 6, putting it all together. Let's combine everything into a simple, powerful plan. Step 1, workplace pension match. Free money. Always collect every pound of free employer money available. Step 2, max your ISA. Flexible tax-free money. Your ISA is your freedom fund. Step 3, maximise your SIPP. Tax relief superpower, especially if you're a higher earner. Step 4, use spouse strategies. Move assets, split gains, double allowances. Summary. If you're in your 40s, this is your decade. This is the decade where you have the income, you have the opportunity, you have the tax advantages, and you have enough time left to compound hard. If you take these tax-free strategies seriously, you can add tens of thousands, even hundreds of thousands of pounds to your net worth, to your retirement fund, without earning a penny more. But what if you're not sure what to invest into? If you're thinking about index funds, for example, see below for a recent video.